right, it's always it's always a good thing to be able to profit. So I'll talk about that a little bit later. So good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is June 6, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. I've done more calculations simply because we were able to get this pivot here. This move from today validated that calculation, and the new calculation spit out this number, which is 139.98. Now this is just a calculation, so I highly doubt it gets to 139.98, to be honest. But the calculation is a calculation, and that's the number it gave me. However, if the SPY somehow figures out how to get up to the 135.73 level, right into this 50 moving average, as well as these pivot points and a 0.25 retracement of the Fibonacci retracement level, then I'll definitely probably take a short position on the SPY, and that's provided we get there immediately. Or if we kind of just go to the sideways before shooting straight up, then I'll probably still take a short trade on that, and any stop above this 135.73 is my stop. Okay, so there's a potential that we could get to 139.98. Anything can happen in the stock market. Right now it doesn't look like it's going to get there anytime soon, but that's what the mathematical calculations spit out, and so that's what I have to be aware of. Now today we popped up right into this 20 moving average, and then we are also in the 382 level of the Fibonacci retracement. So this actually is pretty good resistance in my opinion. Now if it wasn't for Uncle Ben speaking tomorrow, I would actually say that we may possibly pull back or actually go sideways in the SPY for tomorrow, before heading back higher. Okay, because we do have some resistance here. It's not strong resistance, but it's definitely enough resistance for us to pull back before heading higher into this 135.73 level. However, because Uncle Ben is speaking tomorrow, there is a possibility that we might shoot up straight into this 135.73. We're gonna have resistance here at this pivot point, but if we actually get to this level here tomorrow, then I'll probably dump whatever I'm holding, any of my long positions, and maybe take another short here at 135.73 if we even get there. Okay. So something to take notice to validate a possible pullback on this 20 moving average is, let's take a look at the dollar. Okay, this is the chart of the US dollar. This is the daily chart. I had mentioned in previous videos that this is a pretty strong resistance. Sure enough, we got a pullback off of this level here. We have another level here which was previous resistance. Actually, it was previous resistance and now coincides with this 20 moving average. I said in the previous video that the dollar will either trade sideways while the 20 moving average goes up right into it, or the dollar will move right into the 20 moving average, in which case we should see a bounce. Now don't mind this candle here simply because this is the after hour trading. As we speak, the dollar is trading after hours, so that the dollar is actually getting a pop, which should mean that the EMini Futures we should see a little bit of a drop. The dollar for today is this candle here. We didn't quite get to the 20 moving average or this support line right here, but it's close enough for me to be aware that we could possibly bounce, which is what we're doing after hours. Again, after hours really doesn't matter to me because anything can happen. It's what happens tomorrow. If the dollar breaks down from this 20 moving average, then our next support line will be this pivot point here. In addition to that, I mean, we have the 50 moving average here. In fact, we can grab this pivot point here, and then by the time it gets there, the 50 moving average should be around this area here. So if the dollar can get past this 20 moving average, then I should expect a bounce around this area here for the dollar to go higher. However, I think that the dollar is probably going to get a bounce over here. Trade sideways before we come down here, if that's even the case. Right now the dollar is really strong, and what Uncle Ben likes to do a lot is to drive the dollar value down, because he knows that's going to prop the markets up. Again, the dollar up, market down, dollar down, market up. It's been like that for a while. I have a calculator here, level here at 85.23, so the dollar has a potential of getting to this $85.23 level. When the dollar was trading around here, people were like, what, 85.23? That's way up there, but look how fast we're getting there already. So now this 85.23 level isn't as unbelievable like it used to be. Okay, so what does this mean? We have the SPY, which is in pretty good resistance, and we have now the dollar, which is in pretty good support. So again, if it wasn't for Uncle Ben, I would expect the dollar to pop up a little bit tomorrow, at least a little bit, if not a lot, and that'll cause the markets to pull back, especially because the SPY is in current resistance. However, this is the interesting part. This is the EMini Futures. Okay, so this is a chart of the EMini Futures. Right now, this candle here, which indicates what looks like a breakout of this upper trend line, this is after hours trading. So as you can see, we have this little tail up here, and that's because the dollar is catching a bid, so it's pulling back the EMini Futures. Okay, right now the E-minis is up about $1.25. All right, so previously, I could tell when the markets were gonna have a little prop up because we were right into this bottom trend line. If you do analysis on the E-mini Futures, sometimes you can predict the future of the SPY. Now, just remember this is after hours trading, so even though we closed above today, so this candle is today's candle, we closed above the 20 moving average, but we're still right into this upper trend line here. So after hours we're above this trend line, but we could easily come under it. So let's just say tomorrow's candle is this, we would have to wait for the next day's candle to close above that candle to confirm the breakout of this trend line here, in which case the next resistance point will be right around this area here, and then of course you have this 50 moving average. Let me load some Fibonacci retracements here. All right, so yeah, so this 50%, sorry about that, this 50% fib level, this pivot point here is a pretty good resistance level here for the E-mini futures to pull back. A lot of times when you have a breakout of any kind of trend line, we break out for a couple of days and then we pull back to retest before going higher. Okay, so that kind of contradicts what I was talking about in the SPY, because if the E-mini futures catches a bid, then SPY is going to catch a bid too. So it really depends on the dollar. If the dollar breaks down, then we're going to catch a bid in the markets. Now again, if Uncle Ben speaks tomorrow and he mentions QE3 or something like that, that'll drive the dollar down, and then the markets will catch another bid. If the markets catches a bid tomorrow, then I'll probably dump whatever I'm holding any of my long positions, which I'm going to talk about right now. So the 7-minute market update is now over. Now let's talk about stock. Oh, sorry about that. I totally forgot about gold, GOD, which is the ETF that tracks gold. Let me load my drawings here. Okay, so gold actually pierced through this resistance line here and actually did a legitimate gap fill here before pulling back. Okay, so a lot of people thought gold broke out because it broke out of this 50 moving average, but as you can see, gold actually pulled back and closed below. So what does that tell me? This doesn't necessarily tell me that gold is going to continue down. I mean, it is possible that gold will continue down. We did get substantial amount of volume on this pullback here. However, again, I don't want to take the risk. If gold can get up to 162.22 somehow, then I'll be a happy camper. If Uncle Ben speaks about QE3 or quantitative easing or whatever, he likes to talk about to drive the dollar down. Now, if the dollar goes down, then gold will definitely get a spike, and we can definitely get into this 162.22 level before we take a short. Now, if you take a short on gold now because it actually did a legitimate gap fill here, it is a possibility gold can go lower, because technically speaking gold should be going lower, but again, it's hard to determine when you have Uncle Ben speaking tomorrow, because anything can happen, and he's the caveat, so he can drive gold up or down. So he's actually the best stock player they have, the United States has right now, because he can manipulate the markets just by the words out of his mouth. Alright, somebody asked me to do an analysis on this ETF, which is a UVXY. Alright, so I'm going to do a quick analysis. I can't make any recommendations or anything, but I can just tell you what I see on the charts itself. Right now, what I see is a higher low and a lower high. Okay, so it's basically a triangle. What happened was today's action, the triangle actually broke down. Let me just get rid of all these drawings. Okay, so we broke down from this 20 moving average, and now we're coming close to this trend line over here. Now if you look, there's a 50 moving average around here as well, so we may actually get a bounce. I did have two mathematically calculated levels, which is 17.99 and 15.16. I did mention earlier today, however, the 17.99 may not hold simply because we had this bearish consolidation here on the hourly chart. Sure enough, we broke down from the 17.99 level, but I also did say that the 200 moving average was right beneath it, so we may actually get a small bounce off of that. Okay, this 200 moving average, the price is 17.38. Let me go back to the daily chart. Alright, on the daily chart you have the 50 moving average, which is 16.97. So you can see it's very, very close to each other. When you have two moving averages in two different time frames coinciding with each other, then that gives a little bit a stronger support level. Okay, we also have this this pivot point here also adding to some support in that area. Then let me get a fib level here. Just go up like this, and there you have it. You're actually in a 618 Fibonacci retracement level, and the 618 in the Fibonacci is actually the the stronger of all the Fibonacci levels. So yeah, if you get to this level, you could possibly get a bounce here. If you get through there though, you have gap fill here, which is and the 7.5 Fibonacci level, and you also have this 15.16 level. So you just want to be careful with that, and that's what I see in the UVXY ETF. Okay. Again, the caveat is Uncle Ben tomorrow. But if Uncle Ben, wasn't talking tomorrow, then this is what the charts are telling me right now. Okay. All right, this is a chart of the daily chart of Facebook. This is a trade I took yesterday, and let me just give a quick rundown. Yesterday, I took a trade at 25. Let's see, the low of this candle was 25.75. I had a calculated level which was 25.78. So I took a trade at 25.78 to the long side, and then luckily we got a small pop here at 27.17. Okay, so I mentioned in the earlier video that pretty much the only thing I had to go on was this mathematically calculated level. It's been working out pretty good for me, so I actually took a trade. However, I took a small position, okay, because you really don't want to take high risk, and in addition to that, you really don't want to. You're adding more risk when you do counter trend trades, okay. So in Facebook, I'm up currently at 40% profit, so I've already put in a break-even stop. I play options, so options move fairly quickly, so if we gap down tomorrow, I have enough wiggle room that if it does trigger my stop, that I get out break even, and no big deal. It's like I never took the trade in the first place. However, if Uncle Ben says something good like QE3, then I expect Facebook to pop even higher, in which case I'll raise my stop to a in the money stop, and no sweat off my back. Right now I'm playing with the house's money. Okay. So we'll just see what happens to Facebook. If Facebook goes down tomorrow, I stop out, break even, no problem. If Facebook goes up tomorrow, if we gap up tomorrow in the SPY, or for whatever reason we get some sort of bid on the SPY, then I'll probably sell Facebook simply because tomorrow is Thursday. Friday is a low volume day. However, the previous Fridays, it's been noticeable that a lot of people don't want to hold over the weekend, right? Because they don't know what's going to happen in Europe. But again, if Uncle Ben says, QE3 next week or QE3 next month, then yeah, we'll probably rally all the way through, for a very long time. But I don't think he's going to do that right now. But, only time will tell. Alright, this is a chart of the USO. I took a trade here at this X. This trend line I got from back here, okay, all the way down here. A lot of people I don't see a lot of people draw trend lines the way I do, because I like to cut through things. But to me, you have a pivot here, you have a pivot here. The only thing I cut through was here, but we actually got a pivot right here. And we got a pivot here, but it didn't quite make it there. And then so I took the trade at this pivot here simply because it was already into my 3160 level. Okay, it kind of broke down, but this was based on panic, right? So obviously my mathematical calculations won't work in panic modes, or in earnings. And earnings season, you have a lot of panic and a lot of greed and whatnot. But anyways, I took the trade here, and the reason why I got out of USO, I actually sold USO for something like a 18 to 20% profit, is because in the previous videos I said, if USO, my first target would be a gap fill, and I'll probably dump USO. I have to stick to my guns. You can't be greedy. Again, this is a counter trend trade, right? So as soon as it got into this gap fill here, I sold USO, and sure enough, it looked like it was a pretty good idea to do that. We're also in the 75 Fibonacci retracement level. Now USO could pop all the way up into this 20 moving average, because we also have this gap window in this area here. But again, like I said, it's a counter trend trade, and with an 18% profit, putting in a break-even stop will work. But if we gap down tomorrow because of Uncle Ben, then my stop would actually stop me out with a loss and not a break-even. So for me, because I'm not actually playing with stock, I'm not actually owning this ETF. I'm actually buying contracts off the USO ETF. The margin has to be a lot bigger, because if the USO goes down a little bit, then a lot of that percentage is gone, and I could easily be stopped out while the USO pops a little bit higher. That's why I dumped USO today, and I held on to Facebook, because Facebook, I have a 40% profit right now, so it gives me a little bit more wiggle room, that if Facebook comes down, it may not stop me out before it goes higher, or if it comes down, then I'm safe because it stops me out. So because I already made profit off the USO, I don't have to worry too much about Facebook, and that's why I dumped USO versus Facebook. In addition to that, as you can see, USO only went up a little bit today versus the market's screaming higher. So to me, this stock is still, or this ETF is still showing a relative weakness, and that's another reason why I got out. Oh, and in addition to that, the dollar needs to pull back for the USO to go higher. Okay, that's bottom line. And right now, the dollar is in pretty good support, so it's possible that the dollar might get a bounce. Again, it depends on Uncle Ben, but if the dollar gets a bounce, then USO should be pulling back, which is another reason why I dumped USO. Okay. All right, this is the chart of Google. All right, so I just kind of wanted to show you Google. Back here, everybody thought it was crazy because Google is just skyrocketing high because I had this 571.98 level over here. And you know, it doesn't look so bad anymore because now actually Google gapped right under this 571.98, did not confirm, but again, this was based on fear, just like USO. Okay, so we also had this level over here, right, of support. In addition to that, we just started to chop sidewards. Now, what it looks like right now to me, in my opinion, is we're coming down, and because we're chopping sideways, we didn't get a real spike. But if we actually get a spike around this area here, I have to do more mathematical calculations on this since we got this pivot low here. I haven't done it yet, but I'll probably do it in the next video. But if I'm gonna have to guess that around this area, I could probably take another short on Google. But what it looks like to me is that it's just consolidating. It may consolidate up here before coming down to this level over here, or it may just consolidate right around this 571.98 level before coming down to this 546.73. Whoops. Okay, didn't mean to do that. I just wanted to kind of zoom in here, and this is Google. Last but not least, we have Walmart again. This is WMT. A lot of people are interested in Walmart. Now, the thing about options, the thing I don't like is because Theta, the Greeks will kill you based on time. Time is money when it comes to options, and I'm an option player. A basic option player, but I am an option player. Basically, what you have in Walmart, we came into the 65.47 level. I took a short on the day trade. It broke through the next day. I took a short as a day trade, made some money off of that, but I let it go. I let it run, and it created this shooting star candle. A lot of people at this point, actually a lot of people at this point over here bought puts on Walmart, and right now Walmart is just trading sideways, and so time is just eating them alive. Okay, you know, it's cheaper to buy June calls like they did, but you know, time is just eating them alive. Next week, I believe, is already the options expiration week. You know, Theta is just, you know, devours you after, you know, you're within the same month as your options expire. In any case, right now, though, these past 3 days, Walmart has been showing a lot of weakness where the markets have been strong and Walmart has hardly done anything. Today, the market spiked up and Walmart only went up 44 cents or something like that. So right now, I think Walmart is in weakness, and it is possible that Walmart could already start coming down. Okay, it's definitely a possibility if the S&P 500 pulls back tomorrow. However, I have to stick to my rules. 67.70. If it doesn't get to 67.70, then I move on. The reason is because my stop is going to be above 67.70. I want to get my option, or I want to short the stock as close to my stop out as possible. So if it does close above 67.70 and I stop out, my losses are very minimum. If it doesn't get there, then, you know, no big deal. I'll move on to the next one. Okay, so that's pretty much my opinion, and this is your 7-minute market update. And God bless you all. Good luck to your trading. Thank you for watching, and I'll